Investing isn't supposed to feel like gambling. No Wall Street complexity, no sleepless nights, no hype-driven regret. Today, we make investing simple, strategic, and sustainable. Welcome to Wealth Tactics, the faceless fire command center where financial independence is built through intention, not speculation. This is week 2 of tactical wealth building, and today we decode investing strategies that actually work. Subscribe and activate your wealth protocol, because compounding isn't optional, it's tactical. Most beginners lose not because the markets fail, but because their mindset does. They chase hype, time markets, overanalyze, panic sell. Here's what usually happens. Buy during peak FOMO market dips, sell in fear. Repeat emotional spiral. Simple investing means detaching emotion, applying systems, and letting time work for you. Let's start with the strongest, simplest tool. Index funds own hundreds of companies. Low fees, broad diversification, zero stock picking stress. Top picks include VTSAX, Vanguard Total Stock Market, FXAI, Fidelity 500 Index, SCHB, Schwab Broad Market Index. Set a monthly auto-invest, even $100 a month. That's 1,200-year plus compound interest with no active management. It's simple. It scales. It works. Here's a strategy even seasoned investors swear by. Dollar cost averaging definition. Investing a fixed amount at regular intervals, regardless of market price. Benefits: smooths out market volatility, removes timing stress, creates consistent habits. Example: $50 a week auto-invested into VTSAX over 10 years equals approximately $27,000 invested plus growth. Even $10, $25 a week builds serious momentum over time. DCA plus index funds equals fire and forget compounding. Want cash flow while you grow? Enter dividend growth investing. You buy companies that pay dividends quarterly, increase those dividends annually, are well established and reliable. Examples: Johnson & Johnson, McDonald's, Apple. PepsiCo Dividend Tools, SeekingAlphaDividend.com, Yahoo. Finance Watch List. Tactical tip: start small, DRIP, dividend reinvestment plan, compounds your earnings automatically. Here's the fire deployment strategy. You split investments into buckets. Bucket 1, Foundation Index Funds, DCA Emergency Savings, low volatility, long-term compounding. Bucket 2, Growth plus Cash Flow, Dividend Stocks, REITs, Covered Calls, Optional Advanced Tactic, grows with income potential. Bucket 3, Risk, Experimentation, small crypto percentage startups via crowdfunding. Momentum-based stocks, tactical cap, 10-15% max. Tactical rule: you don't gamble with fire money, you deploy it. Top 5 traps that sabotage beginners. Market timing. Trying to buy low and sell high perfectly misses more gains than it catches. Over-diversification. Owning 100 random stocks safety. Focus on strength. Following internet hype. TikTok investing tips, skip it. Vet every source. Emotional selling, never sell in panic. Revisit strategy, not Reddit. Ignoring fees. High-fee mutual funds bleed your future. Always check expense ratios. Tactical tip: if you can't explain your investment on a napkin, it's too complex. Simplicity wins. Let's wrap your protocol. Choose one index fund and automate monthly investing. Start DCA, weekly or bi-weekly, any amount. Pick one dividend stock and enable DRIP. Separate risk money from fire money. You don't need complexity, you need consistency. Viewer mission: drop a comment, compound mode activated, then share your chosen strategy or fund. Subscribe now. Sunday's upload will show you how to deploy your money with fire precision. You're not chasing the market, you're building freedom.